Hello, everyone, and welcome to a post-budget discussion on financialexpress.com. This is a special discussion because it is live on YouTube, and you can actually post your comments on YouTube and ask us questions, and we'll try and get them answered by our expert panel here from Deloitte. We've got Aarti Raote, who looks after personal tax, and I have a lot of questions, especially for her, because there was a lot of change in the budget in personal tax. We've also got Gulzar Didwania, who is joining, and he talks about indirect tax. There were some changes in indirect tax as well in this budget, and of course, Debashish Biswas, who will take us through the changes for infrastructure. And I think there was a big push for infrastructure as well in this budget. So if I was to, quickly start with you, Aarti, since I think personal tax affects all of us. And there was, a change in personal tax structure, especially in the new regime this time. And I think the motive was to push more people from the old regime to the new regime, as you can see in the thing. But what's your quick take on the personal tax changes that she's made?
Hey, Roshan, thank you firstly for having me on this panel. And I think the writing on the wall, or the message that the finance minister wants to give is very clear. She wants to move a lot of people from the regular tax regime to the simplified tax regime. That has been the focus. I think even the previous press releases or the statements made showed a concern that she had that simplified tax regime was kind of spoken about as a revolutionary change and a gift to the taxpayers, which obviously the taxpayers were not really availing of. So the writing on the wall was very clear in terms of the new tax regime. I believe none of us really expected that it would be changes only in the simplified tax regime and not really in the regular tax regime. But that's what the finance minister chooses to do. I think now the simplified tax regime looks quite attractive, very, very attractive, I would say. First of all, giving out the standard deduction, which was an angst which everybody who
right.
individuals. Also, the change in the basic exemption or the threshold which is there, that itself makes a big difference. The movement of the basic, exemption threshold for low income group, like people earning less than 7 lakhs of income, it moved from the earlier 5 lakhs to 7 lakhs. I think that itself is a very, very positive step to leave a lot of money in the hands of taxpayers. For the HNIs, the high net worth individuals, I think the gift is there in terms of a reduced surcharge rate. Anybody who's in the higher tax brackets of about 6 crore plus would see a substantial reduction in taxes because the change is in terms of a surcharge which is applied through the whole taxable income from 37% to 25%.
Right. Yeah. In fact, that's what I was asked about. So the impact actually is substantial for the higher income category.
Yes.
But at what point in this tax structure do you think people will actually be encouraged to move from the old regime to the new? In what tax slab? In the 6 to 9, or would it be 9 to 12?
I would say from about the 15 lakhs onwards, that is where they see a change, because under the regular tax regime you might still have a lot of deductions which you want to avail of, like your HRAs and ATCs and things like that. So it would still make a change for an individual taxpayer to go check and then decide.
Right. Okay. Thanks, Aarti. If I was to come to you, Debashish, on the infrastructure front, there was a huge boost? I mean, one is, of course, the capex outlay itself. The government's going to be spending 10 lakh crores, if I'm not mistaken, the figure in FY24. And then there are significant number of projects, infrastructure projects, which have been given a boost. Also, energy, green energy, and an outlay for Ladakh. So, what is your quick take on the push for infrastructure?
So, we were very honest. This was the call for the hour. We are seeing, investment or infrastructure capex led GDP growth for the last 2-3 years, right? So, like 30% year-on-year growth. This 33% year-on-year growth this year, but the last year was 35%. Previous year was also 34%. So it's a huge change. If I look at FY20 numbers and today's announcement, it's a 3x change. From FY20 to FY24. So obviously we believe this was a requirement so that we have a economic growth also, GDP growth also, and it will create a multiplier effect, in terms of demand generation, in terms of private sector investments into infrastructure as well. It will also create jobs, both direct and indirect. So it will have a multiplier effect on the overall economy. Also, you actually mentioned that there was a impetus on the green growth as well. Like, the Ladakh one you talked about, 13 gigawatt of renewable energy evacuation infrastructure from there. Then the waste to wealth, those kind of initiatives will also help in solid waste management. So that bit is also here. Also, when we look at the digital initiatives, right, the AI Institute, there's a focus on the urban infrastructure, or say the 5G on intelligent transport management. So it's a very, very good budget for infrastructure, to be very honest, both from the capex point of view, also from the institution creations, right? National Urban Infrastructure Development Fund. We already have a few states already have, like Odisha, Tamil Nadu, Karnataka, they have their own urban infrastructure development fund. So the national fund managed by the National Housing Bank is also will be a great impetus for infrastructure development, especially creating more bankable projects, viability gap funding, enabling private sector or the especially the tier 2 and tier 3 cities, creating more viable projects in those cities. Thus, great move in that respect as well.
Okay. I also have Rajesh Srinivasan joining, and he talks about direct taxes at Deloitte. Rajesh, great to have you back. I think it's been over a year since we last discussed the budget.
Yes.
And it's great to have you back.
Yes.
Quick take on the direct tax provisions in the budget this time. There weren't too many, but what's your take on?
Right. So we were expecting at least a couple of announcements around extension of the 15% incentive that's available for manufacturing entities.
Right.
It's currently available until 2024, but as you know, the setting up time of a manufacturing facility would take more than a couple of years. So if someone wants to set up today, they may have a challenge in completing before 31st March 2024. So we were expecting that at least there would be announcement for extension of that period to 2025 or 2026, so that it gives some cushion to people to further continue investing in India for manufacturing. So that was one expectation that was missing. The second one was in relation to the concessional withholding tax rate of 5% on ECB loans, right? So the long-term loans that are subject to 5% withholding, lower tax rate of 5%. So we were expecting that would get extended because it's expiring by 23 this year, June. So we thought that would get extended, but for some reason that has not been considered. Maybe it might come in the final bill, but it looks like these two are expected, but really didn't happen. Other than that, one other significant change is in relation to the receipt of share capital, right? Equity capital. Earlier, you would have a taxability of excess amount collected towards equity, whatever was collected as premium, in excess of the methodology that's given in tax law. So if it exceeds that value, the differential is being treated as income. So only residents were covered under that provision earlier. Now it's been extended to non-residents. The reason why it was not considered earlier, why non-residents were considered, was that if you look at all of the startups or the unicorns, the funding, the share issue price will be much higher. It's not based on the regular calculation that you would have. So that was the reason why non-residents were kept away from this taxation. But by bringing them into the taxation, I think you might again find the same issue coming up. And it would be a challenge for many of the companies, particularly the valuation can never be based on a fixed methodology that is being given. And FEMA also allows you to have higher value. So FEMA doesn't restrict you as far as when you get higher capital into India. So the restriction will apply only when you push money out of India. So so to that extent, I think that provision, not sure why it got incorporated. It just says that we wanted to include non-residents into the taxation, but the reason why it was not included was not explained, and why we feel at this point in time that should be considered. So these are the three things that are significant from a direct tax perspective. With regard to the tax administration, I think a lot of good steps have been taken. I think she also presented the data that most of the returns get processed within a shorter period of time.
45% was within 24 hours, I think.
Yes,
that was
that's true. I think I had that experience. I'm not sure whether each one of you had that. But when you file the return, you get the refund in 24 hours. So that's a significant change, progress that has happened in the administration. I'm sure that would continue. I think effort could have been taken to address still the litigation. I think she did mention about identifying 100 joint commissioners and look at the the issues that would be there with the at the appellate the commissioner level,
and also decriminalizing a lot of the provisions in the act as well.
That's I think that's helpful. So these are the things that happen, not significant, but and people are expecting on the transfer pricing side whether there would be some safe harbor rules that would get introduced and you simplify the process of filing, doing the compliance. That didn't happen. Plus the pillar 2 recommendations, we thought that some recommendations would come into the provisions today, and also whether there would be a roadmap for abolition of tax equalization levy. I think these were the things that we were expecting that was not mentioned. Maybe it's not significant at this point in time, but otherwise the overall the structure and the content of the budget has really evoked a positive response everywhere.
Okay. Before I come to Gulzar, I've got one more question from Aarti coming in from a viewer. Giridharan is asking, can you clarify the rebate portion, which was earlier 5 lakhs and is now 7 lakhs in the current budget provision?
Yeah. Sure,
How does it work?
So basically what the current tax provisions, they provide a rebate of 12,500 for a person having income of about 5 lakhs, less than 5 lakhs. So it is a low income group where they do not pay taxes for 5 lakhs, because we are aware that the threshold starts from 2,50,000, but you have a 12,500 rebate. Now this 5 lakh limit has been extended to 7 lakhs. What it means is that a person who has got total income less than 7 lakhs will still pay zero tax. So if, in the earlier tax regime, if you were under a regular tax regime, you would have paid around 54,000 as taxes if you were in this bracket. Under the simplified tax regime earlier, you would have paid 34,000 approximately as the taxes. But now you pay zero taxes. So this is applicable only for person having income less than 7 lakhs. So if you're having income 10 lakhs or so, then this will not apply to you. You will go as per the slab rates.
Okay. Then the slab rates apply, but the 7 lakh straight, it's not a straight pass-through exemption.
No,
7 lakh?
It's not a straight pass-through exemption.
Okay. Interesting. Gulzar, if I was to come to you now, there were a lot of announcements in the indirect tax space and a lot of, incentives for manufacturing, incentives, on the mobile phone front, for toys, bicycles, automobiles. There were reduction in customs duties. So, how would you view the budget in terms of, the change in indirect taxes? I think it has had an impact on the government's revenues also. I think they're foregoing a certain amount because of these reductions as well.
So, Roshan, I think if I have to summarize the proposals and the indication that government is giving, is of course the Saptarishi theory that they've started their budget speech with. Also find, the decisions taken, the proposals in the indirect tax as well. So, for example, green growth. So, if we start with green growth, you see, reduction in customs duty for manufacturing of lithium-ion cell battery for 1 more year extension has been provided. EV, of course, certain parts of EV have been made cheaper to import, and even the blended fuel. So, if you are importing ethyl alcohol to manufacture the blended fuel, then also the customs duty exemption has been extended. And therefore, these are the steps that will, of course, promote the mantra of green growth of the government. Secondly, as you rightly mentioned, the manufacturing, the Make in India scheme. Now, government is looking that they are going very strong on the Make in India initiative, yes. And therefore the changes that we were expecting that they will align these changes with the PLI schemes that they have announced. So, for example, you look at EV, PLI for EV, which is automobile PLI. You look at PLI for solar module manufacturing. You look at PLI for PLI for any other sector. So the focus has been that, okay, please, mobile manufacturing, TV manufacturing. So there have been these PLI schemes announced by the government in the past, and therefore the idea is to make sure that yes, we somehow create local manufacturing capabilities in India for finished products, and therefore basic customs duty has been reduced only on the parts. And in fact, if you see, there has been an exemption on capital goods which are required to be imported for manufacturing of lithium-ion cells. So focus has been to promote domestic manufacturing and of course provide initiative to green growth. But one point I just wanted to highlight, which was not mentioned by the FM in her speech, that import duty benefit on solar modules, right, which was available under a project import scheme of 5%, right, that government is now planning to plug because currently, the solar module, because currently we don't have enough capacity of module manufacturing into India, and therefore industry was solely relying on imports from various countries, right? Last budget, although government has increased the basic custom duty to 40% on modules and 25% on cells, but there was a scheme called project import scheme in which you can import these modules at 5% customs duty. Now, industry has been demanding that there is no capacity available in India, and therefore we have to import necessarily. And therefore, this exemption or the concession rate should continue. But now, government has decided no, you have to procure locally, you have to manufacture in India, and therefore that exemption or concession has also been withdrawn. Another aspect, is of course. There are some duty rate changes, increase, decrease, etc. I mean, you see NCCD on cigarette has increased by 16%, and duty rate rationalization has happened over 500 items. So when she started her speech, she said that from 21% to 13%, I am planning to bring the tariff basic, tariff rate.
Customs duty
now,
down.
This has impacted over 500 items in the Customs Tariff Act. But overall, if you see overall impact that is estimated is only revenue loss of around 1,000 crore, which basically, you are increasing duty on, let's say, one side on cigarettes, you are increasing duty on import of finished items. Now, if you are importing, let's say, a completely built unit of motor vehicle, 10% customs duty has been increased. If you are importing, SKD items of two-wheeler or motor vehicle, then of course there is again increase in custom duty by 5%. So overall, finished product duty has been increased, some raw material duty has been reduced, and with this rate rationalization that has happened, government is expecting around 1,000 crore of revenue loss on indirect taxes. Another important aspect on GST, which actually was of course not very clearly mentioned in any of the GST Council meetings, but yes, we were expecting that input tax credit on CSR expenditure, which was till now available to the companies. Now that input tax credit will no more be available, which indirectly means that the CSR spend will go down by 18%. So that is something that I thought is worth mentioning also, but was not mentioned in the speech, but of course as part of the detailed observations. So I think these are the key takeaways. that I could foresee from the indirect tax side.
Rajesh, one more quick take on MSMEs. There was a certain benefit for MSMEs. From turnover of 2 crore rupees, she has raised it to 3 crore, and for individuals from 50 lakhs to 75 lakh. So, what kind of an impact do you see that having for MSMEs? Because I think that's one sector that's really struggling, the MSME sector in India, and it's one of the largest sectors that we have.
That's true, yeah. Right. I think it's every year. I think got to look at this provision. There's a presumptive taxation, right? Whenever this amount is being increased, you also see a corresponding increase in the number of returns getting filed. That's the overall objective, right? Because you know that people who are in 1 crore bracket, 2 crore bracket, 3 crore income bracket, now gradually they would come into the process of filing the returns. And by giving them this presumptive taxation, that's a overriding objective into this. The second aspect is also making sure that they transact in electronic mode digital, or in check and avoid cash. Yeah. Right. So that's another incentive. That's another aspect that's being thrust upon them in this process. So these are twin objectives that they have when they want to really support the MSME. Bring them into the tax net first, because there is also a lot of leakage. The second aspect is also to encourage the digital transactions, so that you try to cut down the cash transactions. I think with regard to the professionals, it's more of incentive, not to save tax. It's only to just support the professional category also. This has been given more of administrative ease. I think the overall objective is towards creating administrative ease, right? You remove all the exemptions, you remove all the benefits.
And I think an interesting announcement was allowing deduction on expenditure in chasing payments, because I think that's a big struggle that MSMEs have, getting their payments in time.
Correct. See, under the current law, you get deduction only upon payment of interest. In relation to interest, there is a restriction. If there is a delayed interest payment, then you don't get deduction until you make the payment to MSME. I think that's a good move. It's really helping the MSMEs to get the monies on a timely basis. What we got to see is that whether the definition of MSME, I think companies will have to just see whether they will have a system to track this, right? That is also an important element in the process.
Right. Okay. Also, coming back to Debashish, the infrastructure push, I think one of the biggest, most visible changes that we've seen in India over the last FY and maybe the previous one has been on highways, building of highways in India. This time we didn't really have any particular announcements on roads and highways like she has outlaid in previous budgets. Any reason for that, or do you think all of this is going to happen outside?
So again, you're correct by mentioning this, that there was no particular mention of roads or highways in general. But the size of the budget, when we look at 5-print, I'm surely we'll find a lot of investments on the roads, because we know that roads are the the vehicle of economic growth. So I will be surprised if there's no increase in the highway, and we have a amazing ministry, and NHAI is doing a great work. Also the states on building highways. So yeah.
Right. And okay. So actually, we have the finance minister's press conference starting in about 18 minutes. So I think if you have I'll take one quick round from all of you all. Give me like a rating on this budget, from say like 1 being bad to 10 being very good. How would you rate it? Rajesh, starting with you.
I would think around 7.
Okay. So would you call it populist, the budget?
I think so. I think it's addressed all sections of the society. I guess there is something for everyone in the budget. I think people might be happy, and that's how it's being presented. You would see something for everyone in the budget today.
Okay. Gulzar, if I has to come to you, how would you rate the budget?
Yeah, so I think I'll just also add two cents on what I was also expecting, which did not happen. So we were expecting new announcement of PLI scheme. So PLI scheme, government has announced for 14 sectors, right? and the industry was expecting that government is going to add more sectors into the PLI scheme fold. And some of the sectors were toy, shipping containers, chemical industry, leather industry, has been a long pending ask. So this is something that there is no announcement I have seen in the budget. So I'm hoping it is going to happen, but I was expecting as part of the budget. Second, dispute resolution scheme for customs. Government has garnered over 80,000 crore in the dispute resolution scheme for central excise, income tax, and service tax that they announced a few years ago. So there was a long pending ask from the industry to announce a dispute resolution scheme for customs as well. This was another thing that the industry was expecting but did not happen. Now, overall, from a rating standpoint, I would say 6 to 7, because while there is a lot of focus on manufacturing, etc., but also we need to realize that whether or not we have the capabilities, domestic capabilities, and therefore should we do a gradual manufacturing program rather than increasing basic custom duty immediately on everything. So I think that was the area which I thought government could have provided more extension to could have waited for some more time to sort of wait to increase the customs duty on the finished products also, some of the items.
Okay, so you're giving it between a 6 and 7, so 6.5, like the CA also said yesterday. Fiscal deficit between 6 to 6.8, so 6.5 right, baseline.
So GDP growth, yes.
Right. Aarti, I think on the personal tax front, we've had a lot of announcements today. So
yeah, we had a lot of announcements, but what I would say, Roshan here, people did have a lot of hope on the deduction side, whether it's ATC or a housing deduction or all those exemptions that they were used to enjoying. And while we all knew that government was focusing more on the new tax regime, nobody actually expected to see zero changes in the regular tax regime, and almost everybody trying to be nudged and pushed to the simplified tax regime. In fact, that is going to be the default tax regime chosen by the tax system itself. So I would say that, it's a kind of a balanced budget. I wouldn't call it populist or pragmatic. Either ways, it's more balanced. I would also give it a 7. But looking at the way individual budgets go for individual people, they would have invested in properties, or they would have had housing loans. There is a lot of push. I mean, an indirect impact, one would say, because life insurance, all through it has always enjoyed exemptions. And now all of a sudden, slowly, last year it was for units of unit trust. And then this year it is into life insurance, where it's going to be taxed. So it's kind of changing the whole, what I would say, the environment around you, where you presume certain things as given.
Right. So, I mean, I think the impact is going to be seen a lot on private insurance companies more than even the government-based ones.
Yes,
right?
yes.
So,
yes, definitely. And also the newer schemes that have come in, you make this one-time payment, and then you don't pay for a certain amount of time, and you keep getting annuity and all of those things. Yes. Those schemes and those new plans, those might be rejigged. They might require rejigging.
Right. Okay. Thanks, Aarti. And Debashish, to sum up with you, what would you rate this budget as?
I will give a 7 or 8. I think the infrastructure was a big push from that angle. It was fine. There were announcements on the personal tax as well. Aarti did, but it's pushing towards the new regime. Like Gulzar mentioned, I would have liked more on PLIs. To be very honest, given the Make in India, the manufacturing push that we have. That's the reason it's 7 or 8. Otherwise, it's a great balanced budget, as Aarti mentioned.
Great. Okay. So that was our Deloitte panel of experts decoding the budget for you. And of course, we will have continued coverage on financialexpress.com. And if you have any queries, please put them here in the comments on this video, or you can write to us directly, and we will get them answered in due course. We'll also have many more stories simplifying this budget for you. And of course, in the next 15 minutes, we have the finance minister herself coming and giving a press conference. So please join us for that. Tune into financialexpress.com. You will see the FM's press conference as well. And I'd like to thank all my panelists here from Deloitte for joining me for this expert panel discussion on Budget 2023. Thank you all so much.
Thank you. Bye.
Thanks. Bye.